Hey everybody, how is it going today? Welcome back to the channel. In this video, I want to talk about Alibaba again. Is this move up today the bottom in their stock, or is this just a fake out before it rolls over again? All right, well, today the Chinese stocks are notably higher, and in fact, they are one of the stronger groups out there. And if we look in the news, it says that Alibaba, JD, and NIO rivals XPeng, Li Auto lead the Hang Seng higher amid optimism surrounding the potential Biden-Xi Jinping meetup. And if we scroll down a little bit, it just talks about some of the other stocks that are up, like Tencent Holdings, Baidu. They all says they're all trading notably higher on the Hong Kong exchange on Thursday. And it says Alibaba shares traded up 3.9%, and JD.com are up 3.6%. So those are pretty decent moves for those stocks. And if we scroll down, it says the Hong Kong benchmark index is up 2.5% on Thursday at the time of the writing. So that is a monster move. And then it gets into a little bit about why they are moving. And of course, it says the Hang Seng Index is rising, led by tech stocks, following the positive cues overnight from Wall Street and optimism about renewed talks between the U.S. and China. U.S. President Joe Biden plans to meet virtually with Chinese President Xi Jinping before the end of this year, CNBC reported. So it looks like they're making a little bit of headway. Of course, China and tensions between them and Taiwan are at a fever pitch. So I think that it's in the U.S.'s best interest to get in there and try to cool things down. So I'm sure it's going to be very interesting to see how that plays out. But another thing that they've been talking about are some of the big investors that are getting back into these Chinese stocks. Well, recently in the news, there's been all kinds of reports of big-name investors that are starting to get back into these Chinese stocks, and one of them that is probably being talked about the most is Charlie Munger, and it's saying that he has doubled down on his position in Alibaba. And if we scroll down here, it says that Charlie Munger doubled his position in Alibaba in Q3, according to an SEC filing. And it also says that the Fidelity Global Chief Investment Officer said the firm is buying Chinese stocks after this indiscriminate selling, while their Chinese PM said he is putting more money to work here because risk-reward is stacking up quite well. Now, they also said that the IT area is probably presenting the most opportunity right now, said a mainland media source, and they noted that a large European asset manager increased its Chinese internet stake, though an SEC filing hasn't confirmed that as of yet. All right, well, before I jump into the charts, I just want to take a look at some of their numbers on Seeking Alpha. I won't be here too long, so I just want to put some of these numbers into perspective. But if you look at Alibaba right now, it's trading at $156.21. It's up almost 8.5% on the day, so just a monster up day for Alibaba. But just a couple days ago, it was trading for under $140, and I don't believe it's traded that low since 2018. So just to put that into perspective, we scroll down to their revenue numbers. In 2018, they made just under $40 billion. And in the March reporting of this year, it said they made $109 billion in revenue. So more than a double, almost a triple on the revenue side. If we scroll down to their earnings per share, we can see in 2018, they made $5.17. And their earnings per share numbers this year came in at $10.10. So almost a double on an earnings per share basis. But I know that there is still a ton of risk out there with those Chinese stocks, and if that risk wasn't out there, I would be loading the boat on Alibaba. But of course, if that risk wasn't out there, it wouldn't be this cheap. And there still is the possibility that China could pull their capital from the markets, and of course, that would be devastating. And China is already proving, the amount of damage that they will incur, just unleash on their own economy, whatever you want to call it, in order to get things back the way that they want it. So just keep in mind that that risk out there is still as real as it's ever been. But the way that some of these other investors are starting to get back into these Chinese stocks, I think that is a little bit of a telling tale that there is some hope that this is going to be resolved. But let's get into the charts and see how they look. All right, well, let's get into these charts. And the first one that I have up is Alibaba's daily chart. But as a reminder, I just wanted to say I am not a financial advisor. All this is just my opinion and for entertainment purposes only. Please make all of your own trading decisions. But if we zoom in a little bit on Alibaba's daily chart, their ticker symbol, of course, is BABA. We can see this big update that it's having right now, even though that is just a tiny blip on the radar of this monstrous downtrend. But hey, you got to start somewhere, and we get into these charts to try to determine if this is going to be a bottom or not, because the only thing that matters at this point is the right side of the chart. So I want to try to dig in and see if this thing is going to be making a bottom. Now, we're going to need a couple more days. We want to see if this gap up holds or if it rolls over quickly. If it rolls over quickly, kind of like this one did in August, then we're going to be in trouble. But if I zoom in here, the good thing about this move today is, number one, is it's above that 8-period exponential moving average, and it hasn't been above that in quite a while, and it's also above that 21-period exponential moving average, and it hasn't been above that since late June. It held above that probably for about a week before it rolled back over, so that's why I like to say you want to wait and see if it holds, because even this move up that it made in late June, it was holding near the highs of the big gap up, but eventually it rolled over. So just because it holds for a couple of days, you want to wait for it to make a new relative high before you get in for a trade. Now, I, of course, am holding Alibaba for the long term, so I'm not looking to call an exact bottom. I'm actually buying this one on a valuation basis. I started buying at right around 200 even, and I've been buying a little bit the whole way down. I added some a couple of days ago at exactly $140. I was actually going to buy a larger block of it, but I ended up buying half as much because just wasn't sure that that was going to be the bottom. And if lower prices were coming, you know, I wanted to add at some lower prices, but that's the thing about the market. You never know exactly where things are going to go. But if we go to this 15-minute chart and take a closer look at the current price action, I think I am rather encouraged by this part of the chart. We're making a little bit of a descending wedge formation. And as we can see, these things tend to resolve themselves to the upside. And we're getting a sharp breakout through this upper trend line. So I think this thing has a very strong possibility of holding above these support areas. I think right around 152 is very important, and then 150 even is important, and then 145 is also important. So we have those three areas of pretty strong support for Alibaba if it does pull back to those price levels. But Alibaba's chart, I mean, it's starting to look a lot better than it did just a couple of weeks ago. And another thing that I want to show you, let's actually go to the weekly chart. If we go to the weekly chart on Alibaba, we can see that the downtrend has really started to accelerate. You know, the velocity of the move down has really gotten much sharper. And this is the weekly chart, of course. I don't know if I mentioned that or not, but and that is a good sign for a stock that is potentially making a little bit of a climax bottom. I would like to see some more volume to the downside right here, but the fact that it is going straight down tells me that there is a stronger chance of a reversal to the upside, just like right here when it made this sharp move down. It had a nice big sharp reversal. Most of the moves when Alibaba pulls back, you know, they're not that sharp of a pullback, but of course we got a much different situation going on right now with China. But from a technical perspective, I think that this is getting pretty close to a climax bottom. All right, well, before I close out the video, I just want to take a look at a few other Chinese companies. The first one I want to start off with is NIO, and all things considered, a lot of these other stocks are holding up pretty well with everything that's been going on with China, and certainly looking like they're performing better on a relative basis than Alibaba. But NIO has been basically consolidating since March, and hasn't broken $30. I thought for sure when all this nonsense started with China, NIO was going to break $30 quite easily, but it is hanging in there. And if, you know, the Chinese stocks do turn around, this could be one of the better ones because, like I said, this thing has just been going sideways since March. So very nice looking pattern. If we go to Li Auto, We can see Li Auto has also been holding its own ever since the run-up back from May and June. In fact, it's making a very nice-looking bullish triangle formation. Now, of course, you want to wait for these to resolve themselves. You don't want to be jumping in too early because these can resolve themselves either way. But the way that this one is looking, these ones typically resolve themselves to the upside. And if these Chinese stocks get strong and have bottomed out, I think Li Auto is going to be probably one of the stronger ones if it can break through this trend line right here. Another one is XPEV, of course. XPEV basically doing the same thing. This one has basically been consolidating since June, making a little bit of a bullish triangle, but either way, these are just consolidation formations. A break to the upside could be a strong move for XPEV, because if you zoom in a little bit closer, you can see it's right on the brink of breaking those major moving averages. It is having resistance at them right now, but if we get some more strength with these Chinese stocks, I think this one has a very good possibility of breaking through those moving averages and testing the upper end of this consolidation. So XPEV's charts looking really good. Another one I want to look at is JD.com. If you take a look at JD.com, you can see this thing is in the midst of making a nice rounded bottom formation. It's trying to carve out that right side. So if this thing can break above that 200 period, a simple moving average, that yellow line on the chart, I think this one has a pretty good possibility of making a very nice rounded bottom and taking off. Another one is Pinduoduo. See, Pinduoduo is was making a little bit of that same formation, but it had a breakdown back in July. So this might just end up being a long rounded bottom formation. But Pinduoduo looks like it is potentially bottoming if you look at this price action over the last couple of months right here. So that one is one to certainly keep an eye on, because it's just about to break above all of these moving averages that it's close to. And if that happens, I would expect it to make a move towards this 200 period simple moving average. Next one is, let's take a look at DouYu. DouYu, I believe, is trading under liquidation value. This is one of those Gordon Gekko specials where he comes in and buys the stock or buys the company and then liquidates all the assets and pockets what's left over. But DouYu, I believe, is trading under liquidation value. So this one is an intriguing one to look at. I've been staring at this one for months, and I'm probably going to be very angry that I didn't buy some of this stock if I never end up buying this thing once this Chinese fiasco is over. And another one is Huya. Huya also is trading right around liquidation value, I believe. Don't quote me on that if I am wrong, but I believe this is one of the other ones that is close to liquidation value. And this one has fallen all the way down from about $36.50, and it bottomed out around $7.50. So it fell from $36.50 to under $8 in less than a year. That is painful if you were buying this stock on a breakout right here and you were still holding. But that is just some of the pain that is still there in a lot of these Chinese stocks. But man, there is a lot of value if we do come out on the right side of this Chinese fiasco in stocks.